Hi traders, welcome to another trade review. Now, today's trade review is very interesting because we're going to review a trade that resulted in not only a loss for this trade, but because it was the only trade I placed that specific day, which was yesterday, it turned out to be a loss for the entire day. Now, many of you may have heard this before, but I tend to have, on average, at this point in my trading career, anywhere between 6 and 8 total losing days per year. Now, this is not to say that I only lose 6 to 8 times a year. That is totally incorrect. In fact, I lose very regularly. What I'm talking about is the ultimate day resulting in a loss, and that happens about 6 to 8 times a year, where the entire day winds up being negative. In most cases, I'll have a losing trade, but I'll be able to come back from that losing trade about 90+% of the time. So while I do lose regularly on individual trades, I usually don't end the day negatively. But this day was one of those 6 to 8 trading days. Now, the trade was on BABA, and we're going to take this trade step by step so that I can reveal to you the one minor error that could have not only helped me mitigate or diminish the loss, but perhaps even bring that loss all the way back to break even. So we're looking right now at the first 2-minute bar of BABA, and the first 2-minute bar starts off very beautifully. I love plays that start off near their 200 period moving average, which is that red line that you see here, the red moving average, that's the 200. I love when stocks originate their lives in the morning around, near, or on the 200 period moving average. And in particular, I love surges off of the 200 period moving average. So in this case, BABA has opened right near the 200 period moving average and has surged to the upside. This ignited my intention to buy 1 penny above that first 2-minute bar. Once I bought, my risk in terms of a mental stop out is 1 penny below that bar. So I'm willing to risk the loss of 1 bar. Now, the following bar does trigger that buy, and it is here that I buy the moment, the instant the stock trades 1 penny above that high. Now, of course, when I bought, the bar was green. It did not end green at the end of the 2-minute period, but that's fine. The buy was absolutely correct. Now, because this trade took place, obviously, in the latter part of August, I have been trading very lightly during August due to its excessive volatility and the lack of institutional participation that tends to cause that excessive volatility. And so, while my normal trade would be anywhere between 5 and 10,000 shares to initiate my play, I only took 1,800 shares of the stock. Again, I'm trading far more lightly during the month of August than I do on any other month throughout the year. Now, 1,800 shares entry, my mental stop is below the low. What happens is that BABA fails to follow through on that first bar. And what this move does to the downside right here is that it practically eliminates the entire reason for my entry. So this move erases the entire move up, bringing the play pretty much back to even or neutral, if not has turned the play completely negative. Now, what I like to do with these multi-bar consecutive moves to the downside is look at them in a joined fashion. So I'd like to take this multi-move to the downside and imagine that it was 1 bar. So now, as I imagine this multi-red bar movement to the downside as 1 bar, it gives me a clearer picture of what I'm dealing with. So if I compare that red movement down with this green movement up, right, and let's include the tail, okay, because the move up did start from the low of the tail. We're still dealing right now with the red team, the negative team, the bear team, dominating the action. So the red team has taken over control. Now, here is where the mistake comes in. I want you to notice that my stop out was not triggered, that this move to the downside did not break the low. I was willing to completely take the loss. It did not break the low. Now, at this particular point, I would have lost around $2,100, something like that. But I did not get stopped out, okay? Now, look very carefully. When the move back to the upside began to materialize, right, I could have bought once this green bar took out the red bar. Now, I was hesitant to do that because the red eliminated the reason for my buy. So because of that, adding to the play in the month of August, at the end of the month of August, no less, which is actually the worst part of August, caused me to hesitate. But normally, this would be an add, okay, at this particular point. Now, the add at this particular point would serve the purpose of just getting my money back. So under normal circumstances, I'd be looking for the stock to create a new high on the move to the upside. But because BABA eliminated, its drop was so big that it eliminated the reason for my buy, I can no longer expect a new high. I have to expect 50 to maybe a 70% move back up to the new high. So this is the zone that I have to expect. And what this buy would do would lower my average cost from this point, my entry, down to perhaps this point, you see? And the move up, boom, would get my money back. So in retrospect, it's not even so much that the add was the mistake here. In retrospect, I should have added above that red bar. But the real mistake, whether I added or not, was not getting out at the new target. You see, if this stock had pulled back in a very mild fashion, and let me erase this for you so we can get a clearer picture of what I'm talking about, okay? So we're going to erase this. And I want to show you exactly what I'm talking about here. If the pullback was a little milder, let's say like that, and then BABA takes off back to the upside from here, boom, you're expecting new high territory as your target. But because BABA dropped all the way back to the origin of the move up, your target has to now be brought down because it's coming from a lower place. So by lowering the origination point of the move up to the upside, you have to lower the target as well. All right? So not lowering my target and not exiting in this area was the mistake. Now, had I done that with an add down here, add, which would have lowered my average price to maybe here, if I had added to this play and exited when I was supposed to exit, this would be largely a break-even, maybe even slightly profitable trade. So by not adding, I still made the mistake of not really getting out at the new target. Now, by not adding, getting out at the proper target would not have gotten me all of my capital back, all of my loss back, but it would have definitely diminished the loss from $1,100 to maybe something like $300 or $400. And so there you have it. This lesson is really more about when it's time to adjust your target downward. And this is the valuable item you need to pull from this trade review. The lower your stock drops after a buy, the lower your target becomes. And there you have it, traders. I hope you're collecting these one by one because the value inherent in each one of these is likely to be far greater than you realize at this particular moment in your trading development. But as these little seeds germinate and grow, I promise you, the future results of your trading are going to astound you. Stay here, stay with me, at least for several months. Try to last a year. Where you'll be at the end of the year will be unrecognizable to your current self. Until next time, traders, trade well, and we'll see you in the next trade review. Boom.